Woke up late, charts on fire, red and green like a funeral pyre. Discord screaming LFG, but my portfolio's haunting me. Spiked my coffee with regret. Last night I longed to break out bet. Now I'm broke, not broken yet. Just one more pump, I won't forget. Buy high, die hodling. The gen brain dopamine's controlling. Ride the whale, get wrecked clean. This crypto dream's a guillotine. Fake guru with 1,000 subs showed me coins in shady clubs. Promised moons, Lambos and jets. Now I'm left with JPEGs and debts. Stuffed my soul in a 5-minute chart. Market dumped and it ripped my heart. But I'll reload, I'll play to win. Even if I lose it all again. Buy high, die hodling. Gas fees burn, but I keep rolling. FOMO's gone, greed's the king. This crypto dream's a punk rock thing. Diamond hands with the crack in the glass. Risk it all, no brakes, full gas. Liquidation, call me sweet. Whisper welcome to defeat. No stop loss, no regrets. Code and chaos, no safety nets. Satoshi's ghost in my DMs told me to ape again and again. Buy high, die hodling. Gas fees burn, but I keep rolling. If I crash, at least I tried. In this wild west of blockchain rise. I'll be trading till the lights go out. Shots are noise, but I live for the sound. One candle spike, and I'm back in town. Crypto's a fight, and I'm 10 toes down.
Good morning, everybody. How you guys doing? I'm sorry I'm late. I had a brain fart while I was doing the trade hunting call with the community. Okay, so here we are. So let's go over Bitcoin's price action, and then we'll take any altcoin requests that you guys might have. Now, Bitcoin's kind of dragging its feet today, but we have a couple opportunities that we can prepare for. Congrats to anyone who've taken the short. We signaled short at the 4-hour SFP. So we had a daily SFP here. When we swept this high, we dissected the price action to help guide us into knowing when the best time it is to try to jump in. Because with that daily SFP, this target was wild. Like it's suggesting a target when we had the daily SFP all the way down here. And not that it is invalidated or anything, but we had a 4-hour SFP shortly afterwards, like sweeping that daily high, right? Kind of giving us another liquidity grab. And then once we had that 4-hour candle confirm, we dived into lower time frames to define the entry, which came from the break of this uptrending momentum here, right? And the bearish change of character here. So we had the confluence of the 4-hour, the daily SFPs, the loss of uptrending momentum, the change of character. The only thing I didn't like about the trade was that the VWAP wasn't on our side at the time, but it was close to resetting. So I felt a little bit okay about it. And we knew that 100% of people were holding at a profit at this time. So if that's not good confluence, then I don't know what it is. And when we had that change of character, used the strong highs or stop loss guard. We had a bit of a bounce off the VWAP, playing with people's heartstrings a little bit. But then eventually we came up and we hit our target, which was this low here. The target came from the 4-hour SFP. So the same reason why we had that wild target for the daily structure being way down here we had to adapt to a new target based on the 4-hour SFP. So it became a little bit more logical and more grounded. So you want to look for the most recent 2-candle pullback, then use that low as your target for an SFP. If we go to the 4-hour, that's what this was right here. Right? We got that low, 2-candle pullback. Think of SFPs as an attack on your strong low or your strong high if you're looking for longs. So if we SFP'd here, for example, you look for the strong high for your target. Okay, so that's why we started the trade for the short. Now we could have a continuation for a short here. So yesterday I mentioned in the signals, it wasn't a signal, it's just like a prepare for a signal kind of thing, where we got this double bottom. It gave us a measurable target of getting into supply right here. And so it's just a matter of sitting your hands and then using this as a warning sign, telling you if you haven't gotten out of your SFP short, that this could be a warning sign that might be a good time to get out in case we don't have the bearish reaction that we're expecting here, because we had some decent confluences in that zone. And we tapped it so far. If we go to the 15-minute. So the confluences that I saw here were, the impulse fib. So pulling a Fibonacci from this high to this low, right? And we have the golden pocket right here and the 786 zone. And we refined it to the order block and supply barrier right here. And so far we, grabbed this newly added liquidity from this pullback, like getting people stops basically, and hit that golden pocket with a quick wick. Not really a trade that I would normally take, but if a Fibonacci trader were to try to take this with a limit order or something like that, they probably would have entered here with the limit and had a stop loss guard of using the supply zone and the order block confluence for their stop loss. But you could be targeting probably this low, and that wouldn't really give you the good R&R that you normally want. So what I'm still kind of preparing for is another bearish move reaction to that area. And I kind of want to have more structure. I'll be using the 5-minute time frame. So if I go to the 5-minute, we could prepare for a couple of scenarios in this zone again. One scenario is price action that comes up and we sweep this high, giving us a 5-minute and potentially in confluence with that a 15-minute SFP. So you can have a multi-time frame SFP off the exact same level. And then what you do, if you have a multi-time frame SFP, you take it one technical target at a time. So you look at your 5-minute low and you target it first, and then you look at the 15-minute and see if we break that low and get the change of character, if we can get to the 15-minute low. And then you kind of hope for domino effects along the way down, of course. But yeah, that's what we're looking for. If we don't get the SFP scenario, we could still have a bearish change of character, like a 5-minute change of character, and then take that as a trade. And we'd be targeting this uptrending point of interest, and then watching the order books along the way down, because when you have uptrending, whenever you have a trend line on your chart, it's usually a good time to see the validity of it by looking at the order books and seeing if there's other traders that agree with that area. So if we pull up the order books, we can find out right now if there are traders waiting to buy along that trend line. If there is, then that tells us that the trend line is likely going to be respected again. How's the chat doing? Good morning, Noah. How you doing, man? First one to comment, Pluff. What's up, man? Yeah, if it wasn't for Pluff, we'd still be in the trade hunting call right now, by the way. So you should thank him. I almost missed this live. Coma, how you doing, man? Fomospian, that's a funny name. Randy, how you doing? Sterling, how's Sterling doing? Maxwell, Gear, Jason. Gear wants to check out Render. We can do that after for sure. JB, Nonstop TY. You want to look at Dogecoin? Yeah, we can do that. So Render and Doge is on the list after Bitcoin. I keep getting you, Brew, and now Wave Cipher to do TA on render. Just understanding all opinions. That's a good idea, man. That's a really good idea. Especially if you're a new trader, or even if you're not a new trader, just getting a bunch of different traders, because it's interesting when you have, let's say, like 3 traders like you're doing right now, kind of give you an opinion, and they're all kind of like got their own rules. The rules kind of talk to each other. So you'll find out like the different confluences that different traders look for their set of rules that they've back tested to produce their win rate. And you can kind of merge them all together. It's a pretty cool idea. Manuel made 5K off the short. Good job, man. You made more money than I did on the short. I made a big mistake on that short. I'll talk about that too. What I like to do when I leave my charts for even just for a moment, I'll set up a limit exit at an area of concern in case we have a wild bounce off it, just from like previous like mistakes I've done in the past. I'll set a limit, and then when I come back, and normally I have an alarm just before it to warn me that, hey, that limit might get hit. Come back to your chart in case you need to remove it. Didn't have that alarm, and because I was going back to the studio to start another trade hunting call, and I didn't remove it in time, and I got out of the trade at I made like $120, and I risked to lose 100, aiming to gain like 200 or more, and yeah, oh well, still made money, but not the money that everyone else made off the trade. BNB looks like it never wants to stop. I kind of don't want it to, because you guys know we created Karma, right? And the better and better BNB performs, the more we're just gonna pump organically, even without buyers, right? I think since BNB has started pumping around here for Karma, I'd say about 20% of this move is just caused by the growth of our liquidity organically from BNB's run. We got a free extra for like $50,000 in liquidity. Okay, so render, Dogecoin, BNB. Thanks, Coma. Appreciate that, man. All right, let's get to it. So yeah, just a quick recap of what I'm preparing for locally would be this 5-minute bearish change of character, 5-minute or 15-minute SFP, and then coming back down to target these areas. We were going to look at the order books to see if there's any buy walls, if there's any confidence in certain key areas. We have a lot of confidence for sellers at 123,220 for the amount of like 300 Bitcoin. We have a lot of decent amount of confidence for buyers at 121,560 for the amount of about 200 Bitcoin. So nothing crazy, but we should still mark it. So 121,560, your horizontal line, coordinates, 121,560. All right, so we have some buyers waiting here. Is that an order block? That looks like an order block. Okay. All right, so we know we have about 200 Bitcoin here ready to be bought. Now, a big 200 Bitcoin sounds like a lot of money. It is, but it usually only takes about one tap to mitigate a buy wall like that, unless we have really low volume during that time. If we have super low volume when we approach this and the buy wall's still there, you can still kind of see something like this a little bit until it breaks, or until it induces a reversal. And then we had that sell wall, and that sell wall was at 123,220. 123,220. Okay. So we have some people trying to limit exit here. That could have been the result of this wick, could have been the cause of the wick, or it could be new investors, because I wasn't looking at the order books at this time, so I couldn't tell you. It could be new investors preparing to exit here, to front run a potential SFP. I don't ever recommend trying to front run an SFP. Wait for it to confirm. Unless you have rules otherwise that can allow you to do that. because I know they exist. Okay, and that sell wall was worth how much? It was worth, yeah, 300 Bitcoin. So 300 BTC. Oh, I got a B in here again. Sell wall. All right, cool. So kind of got like equal buyers and sellers playing around with this range right now. So we have that confluence here for our SFP then. If we came up here, sweep this, we know that there are sellers agreeing with this area here too. All right, cool. And if this is uptrending, you might see this buy wall evolve over time. Okay. You got stopped down on Ondo. Oh, that sucks, man. Okay, let's go through the requests. Oh, another little area I want you guys to prepare for. If you're not interested in shorts, right? Some people are one-dimensional traders. They don't like taking shorts, and I understand that. It took me like a year for me to like enjoy doing shorts. If we go over here, this area here, this previous value area high came from a 16-day range from the past and had a lot of influence over helping us in previous trades, like this one, for example, when we failed to get acceptance into it. And now we can use it as an area to prepare for support. So we have this area here at 119,200. We got this wick that we can grab liquidity from. So that's decent liquidity. That's decent confluence for a bounce. We hit that value area high. So if we get the structure, right, and we make our way down, let's say we maintain this pace all the way down. Like the pace suggests that it could take, if we do come down, it could take up to a day and 12 hours to get there. But when we do get there, I'll be looking for that bullish change of character, break of momentum, test off the previous value high, and a sweep of this liquidity. And I'll take the SFP if we get it. But if we don't get the SFP, yeah, we're looking for that bullish change of character to lead us back up to the all-time highs. But I do believe that it won't be the move. It could be the move, right? A move where we have this strong trend-bound move again to the upside. But if we look at the daily and how we just like skyrocketed to this point, it'd be healthier and probably give us a much higher target if we consolidated here first for a bit, reset some of the higher time frame oscillators, and then allow people to take profits, new investors to get in, kind of resetting the supply and the profit and loss charts and the real unrealized charts, and then allow us to get that bigger, stronger move. So here, like I said, don't forget it's the move, but I think it could be the move to at least back to the all-time highs, where I'll be preparing for a reversal again, and then maybe we'll ping pong here and range for a bit. All right, so that's what I'm preparing for right now. And then we got, but this is the local stuff. This is the more longer term, maybe tomorrow kind of thing. Okay, now let's do some TA requests. Let's see what we got. So we have request was, we got Dogecoin. Render was the very first one. Let's pull up Render. RNDR is the ticker. Last time we looked at it was on the 6th. Oh, and I do want to talk about a trade that we were looking at today with the community in the trade hunting call that looks really promising. We have a member that's been watching Wormhole like a hawk, waiting for this massive inverse head and shoulders to break, and it broke, and now we're just waiting for that. We're kind of waiting for that lower time frame retest to front run a massive move. Okay, so yeah, Render just lost its local value area. The last time we were kind of looking at it, we were talking about the break of this level, giving us this measurable target, and we got there, but now, yeah, we had that consolidation and it kind of fell down alongside Bitcoin. But now we're kind of building this along with a lot of other assets. This is the kind of picture most of them are kind of making right now, right? With Ethereum and a lot of the stuff with Ethereum pairing liquidity, they're kind of all painting the same kind of picture. This kind of inverse head and shoulders, right? Now, it's not invalidated, but I didn't trust the sell shadow wicks here. So the downside with this kind of crappy structure, you kind of want to have these levels broken when you're trying to jump into longs from up here. So the trend bound rules will get awkward around here. So you kind of want to try to front run the breaks instead down the lows. So I think we're maybe at a golden pocket 786 level. Yeah, we are at like a 786 golden pocket level from the low to the high. Yeah, but the structure's pretty ugly. This was because we didn't get the lower low here. This was our change of character level. So we needed to have a close above this wick in order to induce that change of character, but instead we got the SFP. So when you have an SFP take the highs like this, it extends the level that you need to have a close above it to have the proper change of character. So this kind of stuff is cool for shorts, but it's really crappy when you're preparing for longs that you need to have that level broken now for the change of character. And like one thing you could do if you don't if you don't have rules to help you catch the lows, you can wait for the high to be broken, have it induce a pullback, and then try to get in on the pullback itself, and then go up from there. Because all the rules are met during that time, but the risk-reward ratio most likely won't be. So you'll have to wait for a pullback, wait for the risk-reward ratio to be in line, and then you can start targeting your supply concerns. Or get the measurable target from the structure, and then target from there. For me, I'm looking at this as a inverse head and shoulders here, but more macro, like if you include the entire range, we have like a regression trend. And the regression trend target is this high here. So catching it from the highs for a trend bound move is a little bit high risk because you might immediately have your head hit and then come back down and get stuck in this range. So basically what I'm trying to say is it's tricky. It's a tricky one. So we're holding off these previous highs. This red line is a thick red line because if you look at history of this asset at $3.35, we have a lot of support and resistance off it. So it's a big key area of interest. So maybe I might have to defend the lower time frames. Maybe like a bullish change of character in the lower area if we come down lower to kind of front run that move. But overall, if we do get that move to the upside, like I said, this is your area of concern here. And we have this previous valley area low here and these previous lows here that we can test and hit our head off of that too. So there's resistance to be expected at like 246.7. But what you're kind of hoping for is a break into this area, acceptance with a break of structure, so you can start targeting the valley area high again for that valley area rotation, while watching out at the point of control and any supply zones along the way. For me personally, I need to adjust this. This was like a little demand zone that we were watching before, it looks like. If we broke here, this would be an area I have to watch for a potential bounce. Got the bounce, but we maintain our way down afterwards. We can draw this momentum right here on render. And this could kind of help you identify a potential squeeze event. So if we consolidate through here a little bit longer, you can expect volume to potentially pick up if we break this momentum. Well, that is render. Let me adjust some of this noise. It's our render chart. So anyone who uses our render link to view the chart so you can compare it with your own analysis, that's what you got to watch out for. Short. This can be deleted. This was a previous supply concern right here that we mitigated that helped us guide us into knowing that we're going to hit our head around here until eventually we used it as support and we ran up. So we can delete that now. And we can delete this too, because that was that reversal move that we're hoping for to bring us up to these highs and mitigate this supply. Some assets got above this supply, by the way, and maintained a good pace up. So whenever you see something like that, that means they have relative strength over render right now. All right, cool. So deleted that noise. We could pull. We have a fixed range here. We could adapt the pull to here. And this could help us in understanding the active price action since we have two value areas stacked above each other like this. You can look at the value area data to help you identify like key areas of interest. So the previous value area high is in line with our the regression trend target. So we have confluence there to hit our head too, and it's in line with the bounces that we had here too. So we can test those previous lows as resistance. And of course, make sure you mark your previous point of control. Right, so now you can kind of see how the market structure has kind of shaped its way around it. Currently using the previous point of control as resistance, support, support, resistance, support. So if we come back down here, we got that previous value or low confluence and prepare for longs. Which would be much more healthier than waiting for the break of the highs. All right, cool. So that's render. I'm sorry if I kind of spent a lot of time on that one. Let's go to what's the next request? Was Dogecoin? Okay, next request is Dogecoin. Wayne saying he can't. What's up, Alex? Crypto? How you doing? Someone's behind me. Don't worry, man. It's just Kramer. Whenever he says something, I just do the opposite. What Wayne's struggling to understand the difference between change of character and break a structure. We can go over that. I know I kind of go over that a lot in the lives, but I could definitely go over that. I'm going to do TA on Dogecoin, and then we'll go over the difference between a change of character and a break a structure. I promise you, like once you get it, you'll get it, and you won't be able to unsee it after that. Okay, so Dogecoin first. We have that chart already here. We already have a trade plan for Dogecoin. We were talking about it today during the trade hunting call. We were looking for a bounce here. Looks like we got the bounce here because there was a 15-minute order block that was created with this wick, this doji candle, and this engulfing candle. And we're kind of hoping for us to come up to retest this downtrending momentum that's been holding it down since around 27 cents. Now we're at 25, and we have the point of control here. We have wick levels here, the downtrending momentum. So basically what we were looking for was an SFP potentially off this high to induce a break of the low, get the change of character, and then bring us down to as low as these extreme lows at 24 cents. Yeah, 24,367 kind of area here. If we don't get the SFP, our change of character, unfortunately, would be way down here. And I won't feel comfortable shorting a change of character at a value area low and where the VWAP is. So kind of screw that, right? So if we don't get the SFP or higher level posing change of character around here, then I'm just not going to take the short. It is already in kind of an awkward spot, shorting in the middle of a valley area. Normally, my goal is to short at the top of a valley area. But POC confluence is sometimes something you can't really ignore, especially if it's like an SFP. It'd be a quick in and out kind of trade. But yeah, focus on longs, the bottom of valley areas, guys. Focus on shorts at the top, but try your best to not take any trades in between unless you have a really good reasoning that aligns with all your rules. But yeah, if you're not comfortable with this trade, the next best thing, in my opinion, would be a sweep of this low right here at 24,297. Let me just fix this a bit. Here we go. And in confluence with that, a bounce off of the previous Valerie high, a bounce off the 50-day EMA. Like, I think this is a great spot to prepare for longs. And we have confluence of this more macro uptrending support kind of converging with that area. So, and we had the downtrending momentum that we're kind of creating a squeeze here, right? So we have our apex point right here between that uptrending macro daily momentum and this downtrending local momentum that could induce a move up. So the stars are kind of aligning for a pump for Dogecoin. Now where I target from here, if we got the trade, is first of all, if we get the SFP, just take it to the SFP target. If we get the change of character, then that tells you to hold and not take profits. If we break the downtrending momentum, that tells you to hold and not take profits. But once you have that bunch of opposing rules that would normally tell you to take a short, you get out and take profits. But overall, I'd be targeting the Valley area high up here at 26,254, where we had the supply concern that we fully mitigated, by the way. This is pretty much what sparked the downtrend, right? We had the confluence of Bitcoin reaching its all-time highs, getting that daily SFP, and Dogecoin hitting this supply zone. So a lot of things warned you that we're going to come down during this moment, and we were above the active Valerie high, which sparked this downtrend. But now we can come up knowing that the supply has been mitigated. We obviously have new supply that was created, but it's not nearly as strong as it was once here. And now we also have liquidity resting above this high as well that could help attract market makers for an exit plan around here. Market makers need a lot of liquidity. Institutions need a lot of liquidity in one little clustered area so they can get out or in the market with the least amount of price impact. So watch the liquidity charts because it'll be really helpful for understanding what the market maker's vision is so you can use it alongside with your trades and just become a market maker nightmare. You're the man. I really appreciate it. Oh, no problem, man. Okay, so we went through Dogecoin. Again, I feel like I kind of overanalyzed that a bit. Let's go to drawing market structure for Wayne so we can get a really good understanding of it. Because honestly, man, market structure is like layer one to trading, the first thing you should learn. And then you start learning about order blocks. Then you start learning about the VWAP, all the other stuff that you want to apply over top of market structure. Because changes of character and breaks of structure, when they occur alongside areas of confluence, is how you can build really good rules to become a profitable trader. But here, let's draw it out. I know I draw it out a bit of a million times, but here we got price action coming in from an uptrend, right? And then I'll give you a candle example after. But I want you to visualize these as candles, and they include the wicks, right? So a line graph chart that includes the wicks. Most line graph charts only include price exceptions, by the way. So price acceptance being body candle closes. But yeah, here, pullback of at least 2 candles. You need 2 candles to define a healthy pullback. And I'm not meaning like 1 red, 1 green, then 1 red. It needs to be 2 consecutive candles for a pullback. Okay? And then when we break the high during that moment, when you have the 2 candle pullback, what happens the moment you have 2 candle pullback, you have what's called an unclaimed high, right? And then when you start coming back up from here and we break the unclaimed high, we create a strong low, right? So here we pull back again, unclaimed high, break, new strong low, break a structure. And then what makes it the key difference between like a break of structure and a change of character is one's breaking a strong low or a strong high, and the other one's just taking an unclaimed high or unclaimed low. So I'll draw it out here, get the break. Okay, so we have 2 changes to character in this and several breaks of structure. So if I were to draw, like this is the break of structure right here. BOS. Break of structure here. And this is right to the wick too. We need to have a candle close above the wick. And another one right here. And then finally, we have our change of character right here. The change of character, think of it as like a really good structural reversal warning, okay? If we came up through, this is what helped me understand it when I heard this for the first time. So I'll kind of pass it on to you. When we had that break of structure here, and we create this strong low, and we got that higher high taken, during this moment, we take in that strong low. This is the change of character. And then this becomes the strong high. So we have SL for strong low, and strong low. That converts and breaks. And this becomes a strong high, break a structure, strong high, break a structure again, strong high, break a structure, new strong high. And then we break the strong high, and we have another change of character. And this is where it can get kind of confusing. So if we change, let's delete this noise for a second. If we change this around, so I move this down to here, we never got the break of structure. So this unclaimed high never got claimed. We have a little bit of internal structure here, but then the change of character changed to all the way down here when we broke here instead. So basically a break of structure is when a strong low or a strong high is broken with a full body candle closed below any wick that may have occurred down here, right? Or any wick that may have occurred around here. I hope that helps you out. Reach out to me if you are still struggling with that, but that's all included inside the courses too, if you are interested in becoming a member. You should make videos. You can refer people for questions that you get a lot, perhaps YouTube shorts. Yeah, that's a great idea, man. Yeah, I should do that. And then I can just include it in the chat. And we just focus on TA in here. Okay, so market maker nightmare. Yeah, that you kind of adopted that quote as your own there, man. Are you still doing investor share, Kyle? Yeah, 100%. Yeah, you say that like you're an OG. But yeah, a lot of things have changed over the past few years for sure. It's gotten a lot cooler, a lot better courses. Thanks, Coma. Appreciate it, man. Yeah, like and subscribe, guys. Help us grow. All right, what was the next request? We went through Dogecoin. We went through Render. How is Dogecoin doing? How's Render doing? Okay. We went through Bitcoin, obviously. Oh, W is something I want to talk to you guys about. So W, if we zoom out on the daily first, W has this massive, massive inverse head and shoulders after being in a downtrend since its creation, right? So it's trying to establish support. And we got warning signs of accumulation through that inverse head and shoulders, like Wyckoff kind of structure. We got above the 50-day EMA. We got above the 200-day EMA. We broke this downtrending momentum. We mitigated our first supply concern when we came up to give us that pullback, right? This right here was kind of like the confirmation of support off this inverse head and shoulders. And right now we have a pullback towards our uptrending daily momentum. So what I'm looking for is using this convergence between the local downtrending momentum, which I'll zoom in on in a moment, and the uptrending support and the 200-day EMA And the local demand zone, like there's a lot of confluence at this spot to prepare for longs that could allow us to front run the break of this high. Because if we get in here and we break this high, we can start making our way up towards the final supply concern towards this inverse head and shoulders target. And from where we are to that target is about an 76% move. Not saying that we'll get to that target. Like we could have this event happen right here where we have an opposing change of character, lose the momentum off the supply zone, and then start coming right back down. But we have a good momentum-based guide for a macro target to try to get us there. And maybe we'll have an opportunity to see acceptance of this value area and give us a target extension, but that's a big fat maybe. So we got to treat this like it could potentially be the next top to bring us back down here. So zooming in to explain it a little bit further for that front run on the 15 minute, this is the downtrending momentum here. We had that pullback here, higher high, giving us a strong low, got that bearish change of character. We even came down, retested it, got that break of structure to confirm a continuation. Because if you didn't like the change of character stop loss way the heck up here, you'd kind of want something like this so you can have a more local stop loss guard right here when we got that break of structure candle here. Even though you had gotten in at a lower price, rather than just taking the change of character, you'd have way better risk to reward ratio with a better stop loss guard. So you can actually make more money getting at a lower price in scenarios like that. Imagine, I just really want people to get good at risk management. If you imagine if you took this short and you use this as your proper stop loss guard and you're targeting where we are now off these lows, you'd have a 0.6 risk to reward ratio, basically risking lose, let's say $100 to gain 60, and that's just nonsense. But here, you got in lower, stop loss guard here, same target, risk lose $100 to gain like $324. So not everything's about the price you get in on it. Okay, so yeah, right now we're at a demand zone on W. Awkwardly, our change of character levels look way up here. We never had a proper close above this high. So we kind of extended our key level. And it's aligned with the VWAP. So if we get that confluence of a break here, it could induce a break of this level for this descending double bottom. And this could be the spark to start that. But yeah, it's kind of ugly. I would prefer if we came down. I know it's not up to me. It's never up to us. But if we came down here, we'd have that, daily uptrending momentum, 200-day, 15-minute order block, demand zone, and break of downtrending momentum, confluence right here for our change of character to occur here instead. And then we can start targeting like these highs. You can visualize this like a liquidity line with all the order flow, where liquidity is likely resting above here, here, some through here, and here. That could draw a market makers to induce a change of character to have retail bring it up so they can use the liquidity as an exit plan. Well, yeah, but the objective would be to try to get in here so we can front run the break of this high. And you could also do this with a spot buy. You don't have to do it with futures. It's available on Blowfin. I just found that out today. So I might just do a spot buy and hold, because percentage-wise, these are massive moves. So the funding rate fees might be terrible if you did a futures trade using perpetual. Like just from here to here is 17%. And that's not even the whole move that we're trying to capture. So that's W. So we went through W, Render, Dogecoin, Bitcoin. What's my opinion on BNB? What's the difference between InvestShare and Fanoa? Are they the same price? They're not the same price, no. Fanova has basically subcontracted InvestorShare to provide the same service that InvestorShare has. So Fanova and InvestorShare are really pretty much the same kind of thing. There is more activity on the InvestorShare side. We have more permissions to create stuff on that side than we do on the Fanova side. So things get created faster, released faster on the InvestorShare side. Okay. They're kind of leaving to Alex State. Oh, cool. All right, see you, man. All right. Next request was B&B. Let's see. B&B. I wonder if we have any structure to find any shorts. This thing's been on a run. Oh, we got some more structure here. So last time we looked at it, we just drew this demand zone. I believe it was just like right here, right? Or maybe it was just roughly around here. But we have this uptrending momentum that we're testing right now. We could lose the momentum, then break the lows, giving us a triple top. It looks just like a head and shoulders, but this is a triple top because we have a lot of equal highs. That's the main difference between a triple top and a head and shoulders. So head and shoulders, we have a failure to create a higher high when we have our change of character. And sometimes with triple tops, we don't even get a change of character until a much lower level. Because technically, here, we have the higher high, failed to create the higher high, so we have an unclaimed high here, right? And so right down here is our last 2 candle pullback on the hourly time frame at least. So this is actually technically where our change of character would be. So that in that kind of scenario, if you're someone who needs a change of character for their rules, you won't get it until it's way too late. But if you take the short, you have to use the strong low as your primary barrier concern. So if we break this, we target down here off this demand zone and just watch it for the strong low. So if I were to draw pathing on how I expect for it to behave, if we broke this level, and this would work well in confluence with Bitcoin. If Bitcoin came down to 119,200, where Bitcoin's value area high is. So we can prepare for longs here alongside with Bitcoin being down here. But this thing's been on a tear. It's been helping Karma grow. Like Karma's primary liquidity liquidity pair. It's been on a run ever since we broke key level at $864. Like Karma right now, we just hit a $1 million market cap today. So that's a big deal. We mitigate the supply. So now we have like about to the all-time high, the 85% move remaining before we anticipate maybe some sell pressure from reaching the all-time high. But it depends because the way Karma works, it incentivizes people to hold because you get reflection rewards from every single transaction that occurs. So just by holding, you're making money. Most of our sell pressure comes from people just selling the rewards, but the liquidity has been growing. So even when people are selling, it's been pumping. Because we just got an extra, like a free $50,000 worth of liquidity from BNB's pump. Okay. Ava, Link, PMX, Fart. What's with Fart coin, guys? XRP, Caspa, Hemi. Okay, so let's do Ava really quick. Is it Ava or AVAX? We'll pull up Ava. Okay. Okay, looks like we've done TA on this. Yeah, we're looking for that double bottom last time. That was a little while ago, though. Yeah, October 1st? Yeah. Okay. Oh, is Ava the one that... Okay, let's see. Let's zoom out a sec here. So Ava, yeah, this is the one that's been range bound for a long time. This really strong supply zone. Hold the price down every time we came up to it. We blasted right through it the last time, though. So a lot of the sellers that would be here are most likely, majority of them are likely gone, right? So that tells us that if we have any new sellers, they could be just, yeah, they could be young holders of the asset, especially when we break this downtrending momentum. I bet retail will start flooding in. What we have, okay, so we have a local valley area here too, inside of this macro one, right? This is the macro one, and this is the local one right here from this consolidation that we got going on. So I drew a Fibonacci tool. If you guys want to take a screenshot of how I did it, they're very, very helpful if you're a valley area trader. So just screenshot this here. What this does, and you can go over here too, make sure your levels are set to percentages. What this does is it helps you understand the deviation of a valley area or of a range, depending on how you want to use it. So you connect it from the valley area high to the valley area low. And statistically, if you backtest this, you'll find out more. But right here we have 25% deviation, a 50% deviation, and these levels are levels that normally help induce a reversal when we get away from the valley area, and usually provide really good risk to reward ratios, especially when we get that full rotation to the opposite side of the valley area. And that's kind of what we were preparing for last time we were looking at this, is that deviation in confluence with the double bottom outside the valley area from the valley area low. We just had to watch out for the valley area low in confluence with that 50-day EMA. It looks like we did hit our head off of it. And we're coming back down to potentially retest this daily order block down here. If we pull a fib from here, from this lows to the high, we can see the floor of the golden pocket aligns with that daily order block. So we could expect a bounce here. And what's great about this being on the daily structure is that we can use lower time frame structure like the 15-minute to give us a safer confirmation that we're going to reverse. So if we get like a double bomb, like an opposing bullish change of character here on the 15-minute, you can prepare for that run up. So to make it more visually easy for you to understand or prepare, this is our floor. We can refine this a little bit. So rather than drawing a box zone over the entire daily order block, we can refine it to the 786 and like the golden pocket area right here to give us more stacked confluences in a single area. Let's send this to back. Long position. There we go. We can delete this. We don't need it anymore. We can delete this now too. We do have a bearish daily order block right here. Maybe we can find some confluences to make this a little smaller too. All right, let's zoom in. Let's go to the 15-minute. Yeah, so one thing we can do to make this a little bit smaller. Well, we do have like liquidity right above this high though. A regression trend target. Right, we got this descending broadening wedge, kind of a regression trend. We broke it to the upside already. The target's very boring though. It's just right here. So you'd have to depend on continuation structure to bring it up higher. And unfortunately, that target is in line with the bottom side of that daily order block that we were just looking at. So we could likely hit our head here and come down. And if we do, then down here, we could prepare for longs again. We got good confluence of a demand zone here in the lower time frames. Daily order blocks, daily golden pocket. This tap could be enough to cause it to reverse, but hopefully we could return back down after we mitigate the daily bearish order block up here. And then prepare for longs again down here. We have this wick level where we can prepare for an SFP as well. If we manage to break past this, let's say we get like a full body candle close above here and we start consolidating, then the next area of concern will be up here, where this 50-day EMA is, in line with the bearish 15-minute order block and the supply zone right here. But yeah, drawing this. Yeah. All right, cool. That is Ava. I hope that helps you out. Let's go back to Bitcoin. How do you measure the order block? An order block is created, it's a structural candlestick pattern. You look for like an easy way to identify them is this. You get a candle here and here. Then you have like an impulse move up that engulfs past the doji, right? And then here you take the top of the wick, bottom of the wick, and that's your order block. And you look at the 15-minute, you find 15-minute ones. You can go to the hourly, you can find hourly ones, daily, and so on and so forth. Just like in market structure, the larger the time frame, the more power it likely has. And there's different ways you can treat a order block for your trading. You can prepare for a tap like this and be mitigated completely. If we close within it, then you normally want to wait for a change of character reversal off of it. But they're great for confluence for rules for Fibonacci. They're great for confluence for rules for people who use market structure like change of characters. They're great for confluence for like at a value or high or value or low, preparing for longs and shorts. And they tell a story that there might be institutional involvement, right? So look at this order block here, for example. We had this wick here, then a massive impulse move. But the order block is just the candle behind its doji from wick to wick, right? We had a massive candle here, and it looked like institutional involvement, not just because we had the order block, but because of the massive sell pressure that we got. It could be just big whale, big institution, or market maker trying to induce sellers to bring price down. My bet is that it was a institution or company that accumulated a lot and they sold here. Or it could be someone. I've noticed as well, some of the old OG wallets have been kind of waking up and they've been selling. And we went from 120 like really big wallets with 10,000 Bitcoin in it down to like 80. So from 120 to 80 of those wallets since this bull market has begun. And I'll show you what I mean on chain. But yeah, anyways, order blocks are warnings of residual orders. So could be more sell orders waiting to be sold here. That's kind of how you measure it, if that helps you out, man. So you have to, in my opinion, it's safer to look for the reaction and not just ape in with the limit order in those areas. Because we can break right through them like they're not even there. Right? Just like your trend lines. We can break right through them. Support resistance levels. Like anything could be disrespected. So you just got to be patient and wait for the proper indication that's being respected as support or resistance. What's up, Darren? Welcome to the party. Do you like Ethereum for a long here? We looked at Ethereum today. We were looking for longs here, yeah. We're at a previous value area low. We're at pretty much a fully mitigated, it's fully mitigated demand zone now, especially since we breached through it here. But yeah, we're looking for longs, especially since like if you look at the structure, right? when we had this bearish change of character here, we didn't really build any supply concerns, right? We didn't fall down, build a base of structure, then have another impulse move, so we have an area of concern or anything like that. We just have our previous value area high, and we're basically where the liquidity ends, and we grabbed most of it when we came up this last time. So we could just come right back up to retest this low as resistance, and then begin a potential down, start drawing some downtrending momentum from there. So I'd mark this as local resistance to prepare in case we have a bearish reaction, like a bearish change of character, to tell you to get out. If we break right through it and we have a break of structure, then it's saying that you can stay in. But yeah, there could be a good SFP opportunity down here too. Okay, next request. Darren saying Bitcoin has been choppy. It is a little choppy. It's building this like bear flag, trying to induce liquidity to the downside. If you look at this order flow, we're starting to stack more and more liquidity below us. That's why these bear flags normally break to the downside, because we keep taking liquidity from the upside and we're stacking from the downside. So if you think of this as a market maker outlook, this is usually why we come down. But you want to prepare to get in the short at the tops. And we know that there's a sell wall here. So if we do come make our way up here for an SFP, and we'll have the confluence of this downtrending momentum weighing us down, and we can maybe front run the break of this uptrending support and start targeting down here. These lows at 121.5 or 120.5, sorry. Maybe even potentially down to 119.2, which is where I'm really excited for potential longs here. Okay. Chainlink was the other request. Let's pull up Chainlink. It looks a lot like Ethereum. It looks like Chainlink kind of breached past our area of concern for shorts, used it as support, and then fell. We built like this head and shoulders pattern here. Got our change of character after we had the close below this low with this candle. Pulled back a little bit, but never broke the strong high, and then came down from there. So if anything, yeah, this gave you a really good opportunity for an entry. It doesn't really respect most of this, the levels that I normally look at, but on the 5-minute time frame, yeah, it makes sense. Okay. If we came up into our 786 golden pocket zone, had a double top, and broke the low, and it came down. But this was the moment right here that told us that we're likely going to come down. We had that bearish change of character. And then we had a bear flag, came down after retesting. We can get rid of the supply zone that we have drawn, right? It was based on this area here. We grabbed, what's nice about us leading up beyond this, see this little descending bearish regression trend. We ended up taking all the liquidity from it. So this is no longer a threat to us. And we know we can take this, use this information to help guide us into potential shorts if we have bearish confluence when we get up here. So we failed to get acceptance into the previous value area from here. Now we're at a previous value area low. So this is looking very similar to Ethereum in that sense, where we fell back down, got acceptance into this value area, and now we're at a value area low. If we go over to Ethereum, you can see that structural confluence, right? So when you have a whole bunch of things painting the same picture and you want to take the trade, pick the one that gives you the best risk to reward ratio and the least amount of barriers. We have pretty low amount of barriers here, but it might not be the structure that you prefer to trade off of in comparison to this. I don't like this wick either. Let's go the 15-minute. So we got a bigger valley area though. We have a 15-minute order block right off these lows. So I'd mark this as local resistance instead of boxing this, just because it would just tap into this order block and this low simultaneously. So we come in here, we have the confluence of hitting this point of control, this previous low, this order block. So here we got to prepare in case we have an opposing change of character to bring us right back down and get stuck in this consolidative range again, right? So the pathing that I prepare for, unfortunately we have this awkward wick, but if we start to consolidate off of this level here at 2218, use it as support with a break of structure and claim this high, then you can use this low as your stop loss guard. But unfortunately the target's right in our face. If you get the momentum based target on link from the neckline to the head here, and you click and you drag, yeah, basically suggests that we'll make it to the order block. But yeah, it's not one I don't think I'll take. Okay, so that's Chainlink. There's our momentum right here. Yeah, for me, I don't know if I feel comfortable longing into this, but I'd feel comfortable preparing and waiting for the short if we do come up to these highs. We got a previous value high here. We can delete this one because we got some overlap data. We can look at the point of control instead. And just mark our previous value low. There we go. Help Kyle out and hit the like. Oh, thanks, man. Thanks, crypto. Okay. Do you like Ethereum for long? So my answer with Chainlink is pretty much gonna be the same with Ethereum too. I'd rather do the short. Unless Ethereum gives us better structure for longs, because what I like about Ethereum over Chainlink is that the lack of supply concern all the way up to here. And we're taking most of the liquidity, so yeah, I'd rather try to find a front run opportunity down here, like an SFP from this low. I think that would be incredible if we got the SFP. So they don't have to worry about, we have to worry about the highs acting as a barrier, but we don't have to worry about an immediate reversal if we're wrong on the break of structure and turns into a change character and keeps us in the range. Breaks of structure are harder to trust in certain areas. For continuations, at least. Okay. What's SLV? SLV, we'll check it out on Bybit. Super low market cap based on the price action behavior or poor liquidity. I've done TA on this thing before. I don't remember ever doing TA on it. Let's go with a 6 hour. This has been doing well. Sorry. Yeah, this really broad momentum here. What is that percentage-based move? Oh, it's just 600%. Okay, no problem. Fucking crazy. We have this, yeah, pennant structure that suggests a strong continuation, but instead we consolidated through it. Failed off the point of control. And create a really strong valley area. How old is that? That is about, oh, a month long. Nice. Okay. You want low market cap assets, or any asset technically, to consolidate when they're at new all-time highs to help reset the market and create a potential support level for the bear market as we come back down. And we got this previous valley area high. We got this previous valley area low. And we got our previous point of control here. This data would have helped you a lot in this scenario here. When we failed to come any higher at this point with this like head and shoulders, we know that we'd have potential support off this valley area low. And then when we broke here, get that break of structure off of the valley area high, it helped you understand the lead up here. Now we're above this valley area high, so we can treat it like a area of interest for longs, right? Because if we have any demand here, which we do, we got this hourly order block. If we came down lower, we had the confluence of the previous valley area high, and depending on how long it takes for us to get there, we might have the confluence of the 50-day EMA as well. So I'd be looking for longs around here. And you just need to have that structural confluence. But if you look at this chart, trying to depend on market structure when this thing severely disrespects it a lot. Yeah, this is something you'd want to spot trade. Like finding good key levels for accumulation and then finding key levels for an exit plan. You don't really need leverage on something like this. When you spot trade, you can put in the amount that you want to risk 100% of, or you can have a stop loss. And then, because we have like a 30% move to the high, if we get that bullish change of character down here. Otherwise, yeah, its structure is ugly. Just be careful trading it. If you're looking for an opportunity for potential longs or buy for a short-term buy, this is the area that I'd be looking at, but not one that I would personally ever trade. I would never trade something like this. But I hope the previous advice that I may have given you in the past on this, because I've only remember doing T on it maybe once, that has helped you out in some way. Okay, let's go back to Bitcoin, see what it's doing. Still making its way up towards the momentum. And that's the hourly. Let's go back to 15. Yeah, so I'll be looking for a sweep of the high. It's an SFP now. Because I don't think we'll have enough time and market structure to give us a bearish change of character in this area. Metaverse. Okay, so you want to look at PMX on TradingView. It's since it's migrated more data on DEX charts sites like DEX Screener. All right, let's go to DEX Screener. We'll look at it from there. So we're looking at is a ticker change for PMX on here too? You might still have some old liquidity in the last, because when they changed the ticker, they had to migrate liquidity too. So you might still have some liquidity in the old ticker. Okay, Polycol. Liquidity on this. Market cap $40 million, liquidity 186K. That's not a good gap. Should be PMX? Okay. Okay, this is healthier. 41 million market cap, 3.2 million liquidity. Let's check out their bubble maps real quick. Okay. What does this cluster own? This cluster owns 1.42% supply. This one owns 3.07. Alright, it's not bad. Just checking for whales that could mess this up. Okay, so this thing has been on a massive run. So we had this consolidation right here, retested the high of the valley area. I could draw a valley area here, but I'll have to redo the settings. Every time you go onto Deck Screener, there isn't really a cookie saving system. So you have to sometimes have to redo your stuff. Row size 200. Okay, so yeah, we came up, retested the previous value high, got the higher high, confirming a trend-based move. You could front run that with the falling wedge right here, right? And you look for that bullish change of character. Unfortunately, that didn't really occur on this time frame until, what the heck, way up here. Jeez. Because we didn't have a proper 2-candle pullback here. Oh, we did right here though. My bad. Okay. So we broke here, got the retest on the falling wedge with the break of structure. Leading up, this will be your measurable technical target, but we broke right through that. Some people exited, had a bit of a pullback, but then we continued to go up. Now we have this massive double top. We failed to create the higher high though. When we fail to create a higher high, you see 2 wicks like this. You could technically look for a lick wick. This one will be a little awkward because it's from here to here. And we hit into the 786. So our double top neckline is here. Our bearish change of character is here on the 4-hour. Low time frames, seeing a little bit of a regression trend. Everything else is kind of doing that too. So if you're an investor or holder of this, like this is a big warning sign if this breaks, especially if this one breaks. Unfortunately, because of the size of this structure, you'd give up a lot of your gains waiting for that answer. So you can use internal structure to help warn you. Like this double top right here. Tell you to sell and to prepare for a potential rebuy around here. Because this is an area, it's first going to be support before it breaks and potentially induces the continuation down. So around here is where most people should be preparing for potential longs. And percentage-wise, from this high, like that's a huge drop. Looks like a loss of 50% of the market cap. It's a massive range. So yeah, man, this doesn't really confirm bearish until way down here. So until then, the thing's still bullish, like structurally. And we want this thing to range so we can have continuations up. And look at 15-minute. Yeah, same kind of thing. Low market cap. Its liquidity is its market cap in this sense. Right? We have $3.2 million in liquidity and $4.4 million in market cap. Most people who are new to trading are going to think it's going to take like around $400,000 or even 4 million, sorry, let's do easier math, You have $4 million to do like a 10% move on this thing, when really it's going to only take like 300,000, because everything's relative to the liquidity, not the market cap. So it's not going to take that much money to move this thing still, and that's why the candles are kind of wonky and hard to trade. But if we do break to the upside on this, this is where I'd be preparing for us to hit our head again and come down, maybe build a head and shoulders, and then come down from there to start targeting these lows and prepare for reversals off of them. It's a prediction platform. Oh, that's cool. Kind of like Polymarkets. So if it's a prediction platform and it's new, what you do is you look at all the other prediction platforms, find the best performing one, and see, like, based on how PMX is doing and their features, how much of the market shares could it absorb, right? And kind of like what's going on between Hype and Esther right now. If anyone's familiar with Esther, they're building like a B&B version of Hype, except they're also making a really cool hidden limit order system that's going to change the game for traders around the entire world. So Esther could absorb market shares from Hype, and if Esther had the equal market cap to Hype, it would be worth $7, which is like a 2 or 3x from where we are right now. So that's a cool way to give yourself a grounded potential like target if it did as well as its best competitor. Like, where could it go from here kind of thing. XRP was a request. So let's pull up XRP. My bad. There we go. Last time we looked at XRP was October 1st. It's a little while ago. We were talking about, we had this uptrending momentum. We marked this wick level to prepare for a potential SFP. There's no SFP that occurred. Well, yeah, there was one. See right here, this candle is an SFP off of this wick high. This is called a legacy SFP, right? But the target is the same as a regular SFP. You just look at the local low. And unfortunately, based on how the candle closed, you couldn't take it on the candle close to here. There's no R&R there, but you could take the pullback and try to get in on there. Between the confirmation and the invalidation point is a good area to prepare for an entry on a SFP if you don't like the risk to reward ratio. So instead of entering here, you would enter between here and here, because it's not invalidated until this high is taken. And if you got in anywhere around here, you could have gotten in a proper risk to reward ratio to about here. And it did eventually hit that and then came up. So hopefully if anyone did take an SFP there, that they weren't married to the trade, because if it could, you would have got your face melted holding on to it too long. But we mitigated this supply concern on XRP. We got above the point of control. We failed to hold it though. What you'd want to see happen is a pullback like we got, and then a higher high, which would normally induce retail to buy and bring the price up further. But instead we failed to create the higher high, got a double top, and then we started going bearish ever since. Got this downtrending momentum, lost the uptrending momentum here, and then it came up and got the break of structure and continued our way down from there. But now we're on a previous value area high to help us. This is why it's really important to watch your previous value areas, because they can help guide you in preparing for support levels. We're building a bit of an inverse head and shoulders over on the hourly. So we could be preparing for a reversal. But again, it's got that ugly wick on its right shoulder that really messes things up for us. The measurable target from the neckline to the head suggests a move up to there's a little bit of a supply barrier here and our previous day VWAP. So if you have a VWAP on your chart and you see it like all of a sudden spike down or spike up to the price, it'll always go right to the price. It means the daily candle has closed and the VWAP has reset. But you can use previous day VWAP levels as confluence for support or resistance, because it kind of gives you a guide and understanding like how the previous daily candle performed. So here you'll be watching out for it, and then you got to watch out for this whole zone really that could induce a reversal after we get up there. Short. So right here, it's our key level. I want, because of these wicks, I trust the move less for longs. I'd rather wait for the short. But if you're in on a long and you're hoping for a continuation, what you need to see occur is a break above this with a full body candle close, and then a higher high. And then you prepare for a potential exit around here in hopes that we actually just have continuation instead. Because if we get the continuation, we could have a really decent move further back up. We mitigated all this, so let's adapt it to the current price action. Here's the supply zone right here. If I need to zoom out a bit, let's go to the 4 hour for a second. Just want to readapt this. So we have double distribution right here. That tells us a cool story too, right? Because we have a lot of interest here, a lot of interest here, but none right here. So this is called double distribution. Whenever you see in your valley areas a B, like a B formation like this, like we got right here, that's called double distribution. It tells you that there's basically two areas of interest where you can expect consolidation, where price action will slow down and where price action will speed up. And you got to treat these volume areas as support and resistance as well. So this is called a volume shelf. Expect support and resistance off it. Like if you draw a line right off it, you'll see, right? Resistance, support, and then everything in between here and here will be fast moves. So I got this little Fibonacci set up here, from here to here. So fast moves in this little golden zone here. You can see them all, right? And we're at the bottom of the volume shelf. So we could, based on that data, it warns us that we could blast right through this and have a fast move to our supply zone right here. But doesn't mean you ignore this. And you still treat it like it's a supply zone that we might not blast right through. Because if you have that posing change of character here, I'll consider it game over and we can come right back down. Okay, so that is XRP. But this will be a good spot. Yep, prepare for shorts as well. And maybe you get a fast move right back down. Kind of like the last time when we ping-ponged through it, right? Ping-pong, they came straight up, hit our head off the supply zone right here. They came straight back down super fast. It could do theoretically the same thing. Fast move up, hit our head off the supply zone, fast move back down. So have your exit plans ready for those two areas. What I would do is I would have, if I entered along here, I would have a limit exit plan right here to make sure I got out in the event that we broke right through this in case it came down really quick. And then have my finger ready as a market order exit if we had an opposing change of character here. That's XRP. Zaid, how you doing, man? Okay, we went through a lot of assets. Ava, Link, XRP, BNB, Render, W, Doge, PMX. SLV. I can do like 2 more, guys. So we got Kespa was a request. I can pull up Kespa. And while I'm doing that, I do want to let you guys know that we have another giveaway going on Friday. So if anyone who wants to potentially win a $6,000 trading account, we'll be giving one away on Friday. And I'll also be giving away a free one-on-one coaching call. So Kespa, what are we doing? Last time we were looking at was the long. All right, we deviated away from this valley area here. We're at the 50% deviation area. We got into this demand zone slash valley area. Right, we consolidated here for a bit. And we had this little mini demand zone here and this larger one here for this range. We had the squeeze event, hoping that we had a strong move up, but it really didn't last very long. Went to like the local resistance and then had lost momentum. Then we had that bearish change of character and warned us to get out early. We have the neckline for this potential large double bottom forming, being pretty much right at that valley area low. This is a 56-day valley area. It was pretty strong. So with this neckline, if you're late to the party, we need to get above the 50-day EMA, break a structure, acceptance into the valley area, and confluence with, honoring this neckline as support. Like that'd be a good set of trend-bound rules to help you prepare for a move up to maybe the 200-day EMA here at least, where these previous highs are. But if you look locally first, we're bouncing off of our previous point of control. We get that inverse head and shoulders kind of posture like most alts have. Right? Bitcoin's building a bear flag, while a lot of majority of alts, especially those with a lot of Ethereum pairing liquidity, are building like this inverse head and shoulders posture. We have a supply concern and confluence with this valley area high right here. So if we get up there, we got to prepare for a potential rejection, but only if you get the structural warning, right? Send it back. If we get the opposing change of character, then yeah, definitely you want to get out. But if we get the break of structure, warning us of a continuation, it tells you to stay in. And you might see that domino effect because we see fractalization going on right now. We have the double bottom, we have a double bottom, and a double bottom, and a massive double bottom. So we have like double bottoms within double bottoms. It's called fractalization. Or it's one of 2 ways to use the word. And we got this horizontal ray. Same kind of story. I don't trust the wick. We could SFP off of it, but if we break past it, break a structure, stop loss, target here. The momentum-based target from the neckline to the head. If the momentum were to be maintained, the equal amount of volume will come up to here. So we have some confluence of exhaustion here. Whereas when spot traders take an entry and plan their exit, they are selling the asset, and they have a stronger price impact over the price than futures traders. Okay, so that's Kaspa. We're getting close to our wick level for Bitcoin. Hemi, what is Hemi? Oh, we'll go on MEXC. It's probably listed first there. Only costs 10K to get listed on MEXC, and they don't ask for very much liquidity, which is a good and a bad thing. Gets you listed quicker, but gives you really crappy charts. And you might not be able to contribute very much volume because of volume limitations. But yeah, we came into this demand zone right here, where we had this impulse move up, built a base structure, impulse move up, giving this whole zone pretty much as demand. We mitigated a massive majority of it. We're holding off of that in confluence with the uptrending momentum. We have a neckline right here for our double bottom. If that double bottom breaks, it suggests a momentum-based target of at least here, where this supply zone is right here. But we could have continuations that bring us up to the, I guess that would be the all-time high based on this chart. Send it back. There we go. Mark your wick level down here in case we do come down here. We could get an SFP. And I'll just mark, this is local support. Got a 4-hour order block here as well, in confluence with that for potential longs. Okay, and this is our first supply zone barrier here that helped induce this pullback to begin with. So here, if you're late to the party, you definitely want to wait for us to mitigate this, which would likely induce a pullback to retest these highs. And then when we get the higher high, we have the confirmation that the supply has likely been fully mitigated, and we can come up to our next supply zone, which is the technical target for this double bottom. So if I were to draw pathing and what I expect the behavior to be, it'd be something like this. Maybe up to the wicks, pull back, higher high, then an opposing change of character here. And then from here, you could have a Fibonacci retracement from pulling from this low to that high to see if it aligns with this uptrending momentum for a potential bounce for a continuation up. Well, that's me literally trying to predict the future, but this is what we got right in front of us for now. Yeah, hourly posture, still not really good stop loss guard. Kind of frustrating. So yeah, if you're not in an existing long right now, it's going to be awkward trying to get in a new one. So use this as, like, anyone who's in a long from these lows would be looking right now here for a potential exit plan. But like I said, if we get this break of structure continuation, that tells you that you don't have to get out. And this is a spot you prepare for longs for the continuation up. That's Hemi. I hope that helps. I don't know anything about it, but it looks like it's doing really well. Yeah, since the start of this ascending regression trend here, this bullish regression trend, it's gone up at 280% to where it's currently at, and it's gone up as high as 554%. And if this manages to have continuations further up instead of getting rejected here, you could potentially see it gives an 85% gain. I wouldn't count on that, but normally we'd, after a blow off top like this, you start to see some consolidation to help it give it a healthy reset for potential continuations up. Our Bitcoin, zoom in. What are you doing now, man? Yeah, this next candle might be the one that gives us the SFP. Yeah, the 15-minute SFP target, if we got it, is this low right here. The downside is we have a 30-minute and 15-minute order block right there too. So if we don't break right through that, we could bounce off the top of it. We have the confluence of the VWAP, 30-minute order block, and 15-minute order block all stacked in one spot right here. So if we get the SFP, we got to wash this like a hawk. because it might interrupt our ability to get a full 1 to 2 risk to reward ratio. But this is technically the target right here. If you go to the 5 minute, and if we get a 5 minute SFP off the same exact wick, the 5 minute target is this low here. So you just take it one time frame target at a time. This could give us a multi-time frame SFP, like all simultaneously, because every third 5 minute candle closes the same time the 15 minute one does. So if you get a 15 minute candle SFP, you look to the 5 and see if you confirm that simultaneously. What is an SFP? SFP stands for swing failure pattern. Think of it like a liquidity grab. So if we come up, there's money up here in the form of stop losses and liquidations that market makers use as a tool for an exit plan. And SFP is usually that really common exit plan. So what makes an SFP is simple. One candle comes up, sweeps a previous high like this, but then closes below it. It has to grab, all it is just basically a candle comes up, wicks, and closes below that wick. And then you have an SFP. They're incredible for like really quick, easy trades. If you go to the channel, not the Discord, and you scroll, if you're not a member, what you could do is you type in !SFP. And then you'll get a little mini lesson on what an SFP is, like right here. And if you're a member, then you can click on the video lesson inside the Discord and stuff like that. Or inside the course. We have a course too on it. And today we're backtesting more SFPs around 3:30, and we have a community call at 3:30 every Wednesday where we backtest rules to find out what works and what doesn't, and gives us percentage outcomes on, so we can enhance our strategy. Okay. Okay, guys, I gotta go. I appreciate everyone who's jumped on. We went through a lot of assets. So if anyone's just jumping on now, if you scroll back throughout the video, we went through XRP, CAS, Link, BNB, Render, W, Doge, Ethereum, Bitcoin, Ava, a bunch of stuff. But yeah, today, call at 3:30 for any members who are watching in right now. I'll meet you guys there. I'm going to have a lunch break, and then I have a bunch of calls that lead up to that call. But today's packed. All right, guys. Thank you for watching. Subscribe, share your friends, especially those who are trying to learn how to trade, because I'll answer pretty much everyone's questions. And have a great day, okay? Thank you. Bye. And if you're a member, prepare for a potential signal here if we confirm the SFP.